Welcome back to another scalping lesson. Soil here, and today I want to teach you a very accurate 1-minute scalping strategy that helps you to easily make profit. Please watch this video until the end because I will mention some important points which without paying attention to them you won't be able to successfully and profitably run this scalping strategy in practice. Alright, as I said, this is a 1-minute scalping strategy. So here we set the chart time frame on 1 minute. This is the price chart of euro to US dollar, but no limitation on this, and you can use this scalping strategy on any other asset or market, whether it's forex, crypto, or stocks. The only requirement in terms of the asset or market is trading volume and liquidity, because this is a 1-minute scalping strategy and the profit and loss that we're gonna take are small in terms of price movement, so we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. In this strategy we have two indicators. For adding them, here we click on indicators and we simply search the name. The first one that we want to add is G channel. This one, G channel trend detection, which is written by someone named Jagged Soft. Alright, this is the indicator, which is a directional indicator, and it will help us with the direction of the market. When it's green, the market is in an uptrend, and when it's red, the market is in a downtrend. With this indicator, it's better not to take these buy-sell signals because they are repainting and a few candle late signals. If you find them distracting, you can remove them here from the settings by unchecking show cross. Alright, the next indicator that we want to add is RSI, Relative Strength Index, and we use this indicator with its default settings. Everything is already set on the chart, and let's see how we trade based on this 1-minute scalping strategy. It's very easy and you just need to be focused on your trade entry, stop loss, and take profit. This strategy is a trend following strategy, which means after identifying trends, we wait for a good opportunity in the pullbacks to enter a trade in the current direction of the market. We just need to be quick on our act because this is a kind of in and out strategy, which means we enter and we exit shortly after. When this channel is green, which means we are in an uptrend, then we use RSI for identifying pullbacks and end of the pullbacks. While the channel is green and RSI goes below 50, it means we are having a pullback. So we wait for the RSI to go below 50 and then again goes back above 50, and when it reaches to 60 level, we enter a long position. We could also enter a long position when RSI crosses above its moving average line, which provides earlier trade entry. But by doing this in times that the market is not trending, like this part, we get lots of false signals. Please keep watching this video because I will explain important points for this situation that you must pay attention. Alright, so as I said, while the channel is green, which means we are in an uptrend, and RSI goes below 50 and again goes above 50 and reaches to 60 level, we can enter a trade. So we enter a long position here at this point when RSI is already above 60. The stop loss for this trade is placed below the previous swing low and the profit at 1.5 risk to reward ratio. After this trade, again RSI goes below 50 and here it comes back above 50 and reaches to 60 level at this point. So we can enter another long position here with the stop loss below the previous swing low and the profit at 1.5 risk to reward ratio. For this case, the profit took longer time to be reached here. Moving on the chart, again RSI goes below 50 and it reaches to 60 level here at this point. So we can enter another long position here when the RSI level is already above 60, and similarly the stop loss below the previous swing low and the profit at 1.5 risk to reward ratio. Moving on the chart, here at this point we have an important point here. You can see that starting from here, RSI went below 50, but it can't reach to 60 level and establish a direction, or on the other hand establish a bearish direction. It's just oscillating above and below 50 as you can see. When we have this situation, it means that the price is in a tight consolidation period, and if you look at the price chart and do some price action analysis, you can clearly see that the market is flat here and we have a resistance level above this candle that formed here. In this situation, where the market is in a trading range, reaching of RSI to 60 level is not enough to enter a trade because you can see that the price is still below the resistance level. And if we move forward and extend our resistance level, Even passing 60 level, which happened here, is not enough because you can see that the RSI is above 60 level, but the candle is closed below the resistance level. We enter a trade when we get a candle that is closed above the resistance level. In other words, we enter a trade when this resistance level is broken. We could enter a trade earlier when the price was above 60 level, but there was a high risk of having the price stopped here near this resistance level, like what happened here and here. And the safest option would be to wait until this resistance level is broken, so we can enter another long position here with the stop loss below this resistance level. For example, below the low of this red candle would be a good place, and the profit at 1.5 risk to reward ratio. And you can see that this is a successful trade. Alright, moving on the chart, we didn't have any bullish signal around here, and from this point the channel became red, which means that we are in a downtrend and we must look for short position opportunities. In this situation, we wait for the RSI to go above 50, which shows forming of a pullback, and then we wait until it goes back below 50 and reaches to 40 level. So we can enter a short position here at this point when RSI level reached to 40 level. The stop loss for this trade is placed above the previous swing high, and as you can see, this trade ends up with loss. And this is the next important point that you must pay attention. This strategy doesn't generate 100% guaranteed signals, and losing trades are part of the game. There is no such strategy in reality that can give you 100% win rate, and anyone who claims having that, be sure it's not true. The key factor to your success is managing your risk properly, having your stop loss in place according to your risk management strategy, and having proper level of winning rate and risk to reward ratio. These are the factors that guarantee your success. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping. I have a complete guide on this. The link is also placed in the description of this video, and I highly recommend you to watch it because it's really important to learn how to manage your risk properly. Alright, moving on the chart, from this point again the channel turned to green, which means we must focus for long position signals. Here RSI went below 50 and it reached 60 level at this point, so we can enter a long position here, and you can see that this is a successful trade. Another opportunity formed here, and the RSI reached to 60 level here at this point, so we can enter another long position here at this point, and this is also a successful trade, as you can see. Moving on the chart, no bullish signal around here, and starting from here the channel became red, so we must look for short position opportunities after shortly being above 50 and then going back below 50 and reaching to 40 level here at this point. We can enter a short position here with the stop loss placed above the previous swing high and the profit at 1.5 risk to reward ratio. This is a successful trade, and you can see that it took a little longer time to have the price in our profit target. Alright, after this trade, you can see that here again RSI went above 50 and then went below 50, and again after that went above 50. But if you pay attention to the price action, you can see that the price is declining, so there is no sign of flat market. And when RSI reaches to 40 level, we can enter another short position at this point. And as you can see, this trade is also a successful trade, and we continue like this. Two important points for this strategy that I have already mentioned, I repeat one more time because it's really important to pay attention to them. This strategy is a trend following strategy, so it doesn't work well when the market is not trending. And besides the signals that RSI gives us on this, you must always watch the price action carefully, and when the market is flat and not trending, you must stop trading until a trend is established, or if there is a good breakout opportunity like the example that I showed you in this video, you can take it. And the next important point is risk management strategy, because like any other trading strategies, this strategy also doesn't give you 100% winning rate, and losing trades are part of the game and you need to manage the risk properly. I recommend you to watch my risk management video so you will better understand how it should be done in practice. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.